Hey traders, Jason here from Levitt Brothers. So in this video, I'm going to do an update of the state of the market. Coming into this week, my message to Levitt Brothers subscribers was that overall the market was in great shape. It was strong, it was healthy, it was moving up, close to all-time highs, at least in the NASDAQ and the S&P were. Small caps lagging a little bit, but overall the market was in really good shape, and I had every reason to believe that looking out several months, the market would continue to do well. But in the near term, there were warnings because we had some negative divergences with some of the breadth indicators. Okay, so long term, great shape. Near term, not so much. We needed to be on the lookout for a little bit of softness. All right, so let's go through some charts here. I'm going to go through the S&P and NASDAQ weekly charts, then I'm going to get into some breadth readings just to kind of get an idea of what is going on right now. All right, let's get into it. All right, so here's the S&P 500. Overall, this is the weekly chart that goes back 5 years. Overall, looks incredibly good. You know, kind of a big cup and handle pattern here. Boom, boom, breaks out near 4,600, give or take a little bit, runs up to all-time high, comes back, tests the 21, and then moves up to another all-time high. Everything here looks fantastic. Even if this came down and tested the 21 again, or even if it came down and all the way tested the 50 again, the market would still be in good shape. We could spend a couple months doing this, kind of like what happened last August, September, and October. That would be fine too. Even if we got weakness for a month, 2 months, 3 months over the summer, the overall structure and health of the chart would remain in place. It would take a really, really big move down to destroy that, okay? So overall, market is in good shape, and I would fully expect it to stay in good shape. Tops take a long time to form, and I don't see any evidence that like a long-term top is forming. So for now, I would expect any type of correction or dip to be bought. Next up, there's the NASDAQ. NASDAQ is also doing well, not as well. Okay, so if I go back to, let's go back to the S&P for a second. So the S&P, we had a high here, end of 21, beginning of 22, and then we took out that high at the beginning of this year. So come over here to the NASDAQ. We have a high here in 21, and we didn't take out that high until over here. So the S&P took out its all-time high earlier this year, but the NASDAQ, it took a few extra months. Okay, is it a big deal? Not really. We have, it's still strong. It's still doing well. We still have this 2-year cup and handle pattern here, breakout, end of last year, runs up to a new high, comes down and tests the 21, moves to a new high. Right now we're on a multi-week win streak. Got a few more days this week, so we don't know if it's going to hold. But overall, this is looking really good. Okay, all-time highs, win streaks in place, structure, everything about this chart looks good. Even if it pulled back to the 21 here, the orange line is a 21. Even if it pulled back to the blue line here, which is the 50, even if we got a couple months of zigzag down to catch a moving average or to test a previous level, anything, any moderate move down that takes a month, 2 months, 3 months, as long as there isn't extreme damage done, I would consider the overall structure of the market and this chart to be in place, and I would expect it to be bought and new highs to be made sometime after that. Okay, so overall looks good. Now let's look into some breadth readings to see what's going on more in the near term. All right, so here is the S&P 500 versus the 5-day moving average of the NYSE AD line. And as you can see here, coming into this week or, starting last week, we had higher highs here, lower highs here. So a divergence was in place, market pressing higher, higher, higher. But each day, advancers were beating decliners, but by a smaller and smaller amount. This builds internal pressure that usually leads to a pullback. And that's typically what has happened. Now, in an uptrend, you tend to get, if I could block this out here, this is an uptrend where you get a lot of prints, mostly, we get a lot of prints above zero. Okay, you do get occasional prints down below zero, but as long as they, fall to a moderate level and bounce, then you're doing okay. You can see back last August, September, October, they dropped to lower levels. We had a downtrend, but over here, they bottomed out at a higher level, and the uptrend was, over here, the uptrend just simply stalled for a month. Over here, it stalled for a couple weeks. Over here, it stalled for a couple weeks. So you get moderate drops, and the market stalls and then continues on. Okay, so you're looking for like, how low does this go? So as of, we got a drop here to minus 600 and then a bounce, but like today, as of this recording, we're recording this on Wednesday, mid-morning, we got a drop well below this box here. So 80 line is like definitely underperforming the market. It makes me wonder if we're like due for a little bit bigger of a pullback rather than just a simple consolidation period. Okay, something to keep an eye on, because right now seems to be some negative energy building beneath the surface. So here's the NYSE, here's the SP 500 versus the cumulative NYSE 80 line. The highs and lows match up really well. You can see like here, high there, high there, high here, high here, high here, high here, and the lows too, low here, low here, low here, low here. They all match up pretty well. So the cumulative AD line and the SP 500 match up pretty well. So when you get divergences, it's telling. I also look at the movement between the indicator and the 21-day moving average. Like over here, you got a minor dip below, but then it recovered fairly quickly. And what happened is you got to pause. Okay, over here you got a bigger move below, and then it took a few weeks to recover. And what did you get? We got a bigger move down. Okay, so I look at movement above and below the 21-day moving average, and then I see how long it takes to reclaim it. So as of right now, we're starting to get a slightly bigger move down. Okay, it's not that much different than here. So if we could recover here and get back above the moving average, the market should be in good shape. But if we drop farther, then we're more likely to get this than this. Okay, so that's kind of what you're looking for here. Are we looking at this kind of a pullback? Are we looking at this kind of a pullback? And it's going to be dependent on, do we get this kind of a move down with the cumulative AD line, or do we get a much shallower move down with the cumulative AD line? Okay, we don't know. So you got to wait till things unfold. Okay, we're definitely like on high alert here that we might be in the beginning stages of a mini correction. So you got to watch out for it. All right, next up, here's the SP 500 up top versus the 5-day high low. Okay, so how many stocks are making a 5-day high versus how many stocks are making a 5-day low? Coming in, recently we got higher highs here, lower high here. So on that most recent surge right over there to a new high, less stocks participated. So you got 5-day high low here, 5-day high low here. Even though the market moved up, you got less stocks making a 5-day high versus 5-day low. This tends to lead to at least a pause. Okay, you can look back at other times where there's a divergence like right here, and while it's kind of hard to see, you have the S&P is here, and then 2 weeks later the S&P was here, and then 2 weeks later the S&P was here. So even though the market was kind of sort of grinding up over the course of a couple weeks there, it was mostly unchanged. Same thing happened over here. We had a divergence there. Okay, higher high from the market, lower high from this indicator, and what do we get? We got a couple weeks of sideways movement. So when you get a divergence like this, doesn't mean the market's got to come down hard. It just means beneath the surface, there's less participation, and you're likely to get some softness. It happened back here. This one actually, turned out to be a legit correction. So it's something to watch out for here. Internal pressure building to the downside. Okay, not a ton of support for further upside movement. All right, so here's the SP 500 versus the 1 month high low. Okay, so I just did just showed you the 5-day high low. This is the 1 month high low. So in a downtrend, which we had one over here, you get lots of prints mostly below zero. In an uptrend, you get a lot more prints above zero, as what happened there, as what happened here. But at the beginning of this year, we've had mostly kind of these neutral prints in the middle. Okay, not some support, but not a ton of support. Then we got a print really low, which is kind of like what typically only happens in downtrend. And then we got a recovery here, which was not too bad, but not fantastic. So we're kind of mixed here. Okay, we're kind of mixed. Market's not really sure. I'd like to see higher prints like this to fully support an uptrend, but we've only gotten neutral prints over here, and now we're starting to get some more neutral prints over here. So market's doing well overall, but I don't think it would be considered in a rip-roaring bull market. And then this is the S&P 500 versus the 52-week high-low. So when the market's doing well, I should say when the market trends down, you get prints below zero. When the market trends up, you get mostly prints above zero. Okay, pretty simple stuff. But we got a low print there and then a high print there. It looks like a recovery, but now we're back below zero. So even though the market's way up here, very, very close to its not just 52-week high, but all-time high, we got more stocks making 52-week lows than 52-week highs right now. So it's a little bit of a warning. That participation has definitely fallen off. And this indicator, if the market was strong, you'd want it. If the market was strong, you'd want this indicator to oscillate above zero over here, and the fact that it dropped below is a warning. All right, next batch of charts. These are S&P 500 versus the Russell 3000 stocks above their 5-day moving average. Okay, so we got a divergence that formed recently. Boom, boom. Same thing with the 5-day high-low. When you get a divergence, doesn't mean the market has to fall hard. It just means there's some internal pressure building, and you're likely to get some softness. It happened over here, and then the market trended down. There's a few other times where it happened where it's like here and here, and again, it's kind of hard to see, but like you have mostly sideways movement here for a couple of weeks. Okay, so when you get a divergence here, it doesn't have to fall hard, but you do tend to get some at least some sideways movement, and maybe a little bit of a good give back. So far, we're getting some sideways movement. We'll see if it gets worse. One thing I'll look for is like, can this indicator over here rebound? Okay, so if this thing can come back up here, then the market should be in good shape. But if it moves up, gets rejected, and comes back down, that's going to lead to a bigger and longer correction period. All right, now we're looking at the Russell 3000 stocks above the 20-day moving average. Okay, when the market does well, you get oscillations here above 40%. When the market trends down, you get oscillations below 60. Okay, market trends up, you get oscillations above 40%. So you can see that this box is somewhat similar to this box, although the highs are not. So what we got recently is we got a low, which is even worse than these prints over here. Okay, and then we got a rally back to here, but now we're back below zero. Okay, so like a week or so ago, I was saying, hey, if this indicator can oscillate above 40%, we should be good to go. The market should trend up. But just recently, it dropped below 40. Which makes me start to wonder, over here, all the dips to 40% bottomed out and the market continued to trend up. I'm starting to think that since we dropped below, we were going to have probably a little bit more of a pullback here than just a simple sideways movement or even just a minor drop. Okay, last one. This is the S&P 500 versus stocks above their 50-day moving average. Okay, we do, here we have a lack of, confirmation too. So we have like highs here, highs 80%, highs 80%. When the market's acting well, when it expands, you're going to get like 80% of stocks are going to be above their 50-day moving average. We got a nice print here, but here we have market at an all-time high, but this print isn't very high, and then we got another all-time high here, and we got a lower high there. Okay, so I mean you can draw a trend line. You don't really have to. You can see that there are lower highs in place. So and now we're down at 40%. So even though the market's up here, way up here near all-time highs, you got only 40% of stocks are even above their 50-day moving average. So there's definitely some weakness below the surface. Okay, so overall, those weekly charts I showed you, really good shape, strong, healthy, trending up. Everything looks good, but in the near term, there are definitely some negative divergences that are forming. So we got to be careful. My bias leans to the upside. I still think we have some good charts to trade, but we got to be on high alert that we might be in the beginning stages of a little bit of a pullback, and so stops got to be in place. We don't want to fight any type of market correction. All right, hope you got something out of this. We'll see you next time.